We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up CABO. We are on the monthly time frame. Price action, last candle to the right hand side, is a bearish red candle. We do have price action overall, higher highs. Price action overall, lower lows. We also have that midpoint, and we are adding second level lows and also adding third level lows. So let's see what's going on in the market. So price action on the monthly time frame is a bearish red candle, pushed down to the bottom, lost a lot of momentum. So the market did drew back a lot. Could be a retest for that reversal. Price action is trying to engulf that second last candle of that doji, of that consolidation that it was in for the breakout. So we'll see if the market is going to break out of this area and do a reverse or break down and push down further. Price action body is engulfing the second last candle, body and wick, to that downside, which can draw that market down further unless that wick on that price action identified as a reversal. Price action is currently sitting at 710.83. So if price does draw back, and it can tag that midpoint area of 745.30 before reaching the resistance of second to last candle body of price of 859.19. If it does work its way down further from current price, it can head down to the price action low wick, which would be at 632.21. So we're looking for a breakout that area. So let's see what patterns has formed. So market is pushing down from multiple pushes to that top. So we do have an overall first leg, second leg, third leg, fourth leg. So we have a double top, retest 1, retest 2. Now we're looking for another retest. We don't know how far that market can draw back for another market to push down for that third time. If not, that market can consolidate sideways within that price and second last candle. Or if that market does identify a reversal, we'll be looking for a pattern to identify itself. It can be identified as, we do know that the market did break. It could come back for a full retest, or we can see that W formation in that area for that first, second, third, and market push up for that W. Headed down to the weekly time frame. On the weekly time frame, price action is reading as a bullish green candle. If it had more wick up to the top, it could be a bullish green doji. But it's spiking down area to a low, so it came to retest the bottom of that zone and wasn't able to push down further. So market pushed back up, so it's consolidation at the low that's happening. So we'll dissect this market as, above price action SR line will be the resistance. This is the midpoint, and we do have that low. So market did break into that area, came back to retest, pushed down further, came back to retest the midpoint that it broke, and just identified consolidation. So we waiting for a breakup to the upside of the third to last candle, or maybe second last candle wick to push that market up, or back into that support zone to work its way down further. So we know that above price, we do have a midpoint in that area. So we're going to take a look at what's going on as we're walking down the time frame. Daily time frame price reading as a bullish green candle. We do have that. We are in that consolidation. Also, we can see that patterns forming much more clear. So if that market does push up, it's coming from an incline W, that first, second, third, and we can see that price action trying to push up for that W of that fourth leg. So price action is engulfing the second, third, and fourth last candle. Can clear this out to push that market up. So we can dissect this area by saying we do have price action high, price action low. So there's a midpoint in this area here, which would be anything engulfing the fourth to last candle. So it's a break in that area. So as we're walking down the time frame, we're looking for that market to identify the break, the retest, and see if that market's going to push up. If not, it's coming down from that decline. So it's also could be a wedge pattern. So it's patterns inside patterns, because we did have the break, the return. So I would identify it as the first, second, third. Third leg stops near the midpoint line, and golfs work his way down from that double top. And overall, another wedge pattern, the other pattern that we see is that wedge pattern. Market bouncing up and down in that wedge until we receive the breakout to the upside or the downside. So currently price action is breaking at midpoint. So we are looking for a follow up with the retest. So price action bullish green candles having a hard time to engulf the second last candle wick, still hanging out on that SR line. So we know that area is in a zone. So a little bit below that SR line, a little bit below, above, and we can see markets in that zone. So let's read the market, see what happened. So we can see that market identified as a first, second, third. There's another W in here, first, second, third. Market pushed up, came back to retest with the price action candle and just hanging out in that zone area. Headed down to a 3-hour time frame. Price second is pushing up, but it's still within that third last candle wick. So everything within that wick is consolidation. That's why we're in the zone area. So we're making for the market to break out that zone. Headed down to the 2, same as well with the 2. So let's read the market. Fourth to last candle spiked up. Second last candle came back to retest. Price and push up. So it's a break and retest in that area. We'll identify as that as we will come down the time frame, and we can see that in the 1-hour time frame. Once again, market broke, came back to retest, pushed again, retest again with the second and third to last candle, and market pushed up again. So it looks like a double bottom. So we have a break, a retest, identify the first, second, third, and market pushed up. So we have an incline double bottom. We'll see if we see that much clearer. We can see it with the bearish red candle to the third to last candle of the market, which identified the first, second. The retest is the third to last candle. The market pushed up from that double bottom and retest at the top of the zone, still side by side with the previous second, third, fourth, eighth to last candle wick in the market, trying to engulf to push that market out that zone. 30-minute time frame, same bullish green candle. Same as a 15 bullish green candle. Lost a lot of momentum, so we can see that this candle is losing a lot of momentum. So it could be a reversal to come back for a retest to the previous candle, but it could come back up to that midpoint of that area, which will be identified as a break, come back to retest and still push up further, or just maybe go side by side with a sideways candle for that consolidation before that market pushes up. Headed down to a 3-minute time frame. Now we see why we lost a lot of momentum, because that price action candle did push up, but it became a doji. So it's identified as a break, retest, pushed up, came back down to retag that second last candle. So market's consolidating at the high. And now we can see 1-minute time frame. Market broke, came back to retest, pushed up, and we got another retest. Very important information, guys. Please study and review Forex pattern cheat sheet, breakout retest strategy. Click on images. Okay, guys, this is Cam Jones, FX, CABO, stock.